to think that the 2025 is going to be a bad year because rates aren't, at 3% to let people sell homes, I think is a mistake.
People are buying because they have to, not because convenient for them for the financially on there.
I think a 50-point basis cut will signal to investors that the Fed understands where we are at and that rates need to be lower moving forward.
You're selling a house in the market. It's very important to do, I think, 3 things. Number 1, get an agent that knows what they're doing. Number 2, to price your home well. Number 3, make sure that you understand what you're doing if you're not paying any buyer agent commission.
I also think it's really important that people understand actual context of selling a home and taking out COVID.
Literally 40 factors that go and affect interest rate. So when every single lender goes in and they determine what a buyer's actual interest rate is, could just ask them what your down payment, your loan amount, and your credit score is. And that would be a terrible idea because you're only getting 3 of the other 37 factors. Without getting all that information, you're really just kind of taking a guess. The more info you have, it's more educated guess, but it's still a guess.
They're going to cut interest rates and mortgage rates are going to go higher when there is almost 100% certainty of a Fed cut today. What's going on, y'all? This is the Lending Bros podcast. I am CJ. This is Shane.
What's up?
Thanks for joining us. Big day in the mortgage industry.
It's Fed announcement day.
We've been talking about this day in mortgage for 3 years now.
Our whole life.
I think 3 years.
Yeah.
What are you hearing on the streets? What are you expecting from today?
So at what's the most recent statistic? Over 70%. Yesterday was 70%.
Come down a little bit. I'm starting to get a little worried.
Oh no, is it really?
It's like right at 60.
Oh, and okay. So I'd say a couple of days ago, even like last week for sure, it was a 20% chance that the Feds are going to cut by 50 basis points.
Yep.
And then yesterday on what is that? Wednesday. What's today?
Today is Wednesday.
Today's Wednesday. So on Tuesday they were saying 70%.
Yep.
Likelihood of 50. And now they're saying like 60-ish%.
Last I looked at it was like 61%.
Yeah. But there's almost 100%. I think
there is 100%.
Is it 100% now?
Yeah.
That there will be a cut. So what about you?
Yeah, I think it's gonna be interesting. I think we have now gotten investor sentiment to expect 50 basis points. So I think if we get 25, I think it actually could be kind of a bad day in the interest rate market because I think that'll signal to investors that the Fed isn't living in reality as far as the economic, recession, everything like that.
Yeah.
Because for those who don't know, right, one of the big things that the Fed uses for a recession is interest rates, right? And so normally when the Fed is cutting interest rates, it's because they're trying to increase, the economy, lower the cost of things, and get people to spend more money and, increase GDP, jobs, everything like that.
Yep.
So I think if we don't get 50, I think it could actually be a little bit of a rough day.
Yeah. So I locked. I've been floating, and I'm not a big floating guy.
Yeah.
Floating interest rates, right?
When you get under contract, explain what floating is for.
So when you get under contract, you have the opportunity to either lock in your rate, and you're kind of stuck with that rate, right, for better or for worse, or you can float the rate. So that way, if rates get better, then you get the upside. If they get worse, then you get the downside, right?
Yep.
So I'm not really a big fan of taking that risk to float.
No,
You're not either.
It's not my money.
I've been floating. I've been recommending all of my clients to float. Every single one of them has taken it. I chickened out. I locked in.
I'm still riding it.
I locked in 2 last night and then 2 more this morning.
Yeah.
So I don't feel.
I don't blame you. I tell clients all the time, right? When you look at it from an investor standpoint, right, and from a mortgage company standpoint, and one of the reasons I don't like floating is if they're going to be a lot quicker to follow it on the way up than down, right? Like if they start seeing rates get worse, they're going to solidify their positions and be sure they're not losing a lot of money. Whereas if rates start dropping, the worst thing that an investor can do or a mortgage company can do, right, is set rates really low where they drop, and then the next day they go back, and you lose money.
Sure.
So for that reason, and, we have some tools, free float down, stuff like that, where if you lock and the market goes crazy and it's so much better, we can always renegotiate the rate. So for that reason, I am not a big floater. I am floating currently. We'll see if I change that tune after this. But yeah, I think the biggest PSA that I want to get out there, and there's going to be a couple of videos on this, but that people really need to understand is that the Federal Reserve interest rate is not a mortgage interest rate.
You mean I can't get a 5% rate if they do a cut today?
That's what I mean.
Okay.
So if you see on the news today that they have cut 50 basis points to interest rates, that does not mean that mortgage interest rates have cut 50 basis points. Honestly, if anything, mortgage interest rates are probably going to stay pretty stagnant because investors are expecting 50 basis points. Already priced into the market, already done that. And that's one of the reasons why we've seen such a run on good interest rates in the past, couple months, really month. It's because of this anticipated cut, right?
Yep.
So just know when you see that, right, it's a good sign. Right? It's a sign of good things to come with them cutting, but it does not mean that mortgage rates are cut. I think that's the biggest thing that I can hammer home.
Yeah, I'd say it is 1 p.m. in the last probably 14 hours. So between 8 p.m. last night and right before this meeting, I've had 3 conversations with buyers that are expecting their rate to go to 0.5% today.
Yep.
And I mean, I think you said it really well, man. It's already baked into the price. It's already expecting of that. I think where we do see, some problems is if the Feds do a 0.25% rate cut, because
it's already baked into the price.
Interest rates are going to go up at that point, right?
Yeah.
So it should be exciting for sure.
Yeah, I think something that could be helpful for people, right? I don't think everyone understands, how lenders arrive at interest rates, right? And how, if I go online and I Google what are interest rates today, one, what does that information include, right? Like, is it points? Is it APR? What is it? But 2, what information you need to get an accurate interest rate.
Yeah.
So you want to walk me through that?
Yeah, for sure. So when we sit down with every single buyer, we educate them on what goes into interest rates. Yeah. And it's a presentation. Like, there's a lot. You're basically telling them how to do our job really quickly, right?
Yeah. It's not that hard, don't worry.
It's not, yeah. There's literally 40 factors that go and affect interest rate. So when every single lender goes in and they determine what a buyer's actual interest rate is. So you could just ask them what your down payment, your loan amount, and your credit score is. And that would be a terrible idea because you're only getting 3 of the other 37 factors, right? So without getting all that information, you're really just kind of taking a guess. The more info you have, it's more educated guess, but it's still a guess.
For sure.
So really the only way to get an accurate quote from a lender is to get an application and get all that information and assume that they are actually getting the correct information input to be able to run a specific number on there. So sure. That's something called loan level pricing adjustment. So LLPAs is what lenders do on there.
And that is, you can Google, right now if you wanted to, you can type in Fannie Mae LLPAs. It's like a 40-page document. It's a whole lot. It's
good reading material.
Yeah. If you're not able to sleep one night, I would recommend it. But I agree with you, right? I think it's really easy to just Google interest rates, see them, and then be a little confused. The other thing that you didn't bring up necessarily, right, is a lot of times when you're looking at interest rates online, they include points, right? And so points are you spending money to buy down the interest rate. Points in this market don't make a ton of sense, right? Because interest rates are most likely going to drop, and so you're not going to be in this mortgage a very long time.
Yep.
And so you'll see on the fine print a little star at the bottom of the page saying this includes whatever points. I've seen some that are like 2.5 points. Like, I've seen a lot
in the advertised rate.
Correct.
Yes.
Yeah. And a point is 1% of the loan amount, right?
Yeah.
And so if you have a $500,000 loan amount, it has 2 points. You're paying $10,000 to get that interest rate. So this isn't to say don't look at interest rates online. Everyone does that. That's like realtors telling clients don't go to Zillow.
Yeah.
Everyone, if they're interested in a house, is going to type it into Zillow.
For sure.
That's just kind of what happens.
Yep.
But I think you just got to know what you're looking at, right?
Yeah.
And know that, hey, this is a very general, does not have my specifics in there, and just kind of a starting off point.
Well, and even in Fannie Mae's website, so they advertise an interest rate on there, and that's on all of the news, right? Typically, they're using the Fannie Mae or Freddie Mac average 30-year fixed rate.
Yep.
That's the interest rate that is locked, is what they're reporting.
Yep.
So it shows 6.2% today is the average interest rate locked today on there. Anyone can go and look that up. It's going to be on a million news articles. So with that, there could be someone that paid I had someone that got 5.8% the other day with a point. And then I had someone that didn't have great credit and they paid no points and they're mid-sixes, right? So that means that they're somewhere in between there, right?
Yep.
So it doesn't always, actually very rarely ever tells the full story of what's going on.
We've started to talk to clients about it and get the information out of is what has happened, right? Is, if you look at a 52-week range of interest rates, right, they kind of peaked at that upper 7, low 8 range. And now they're kind of in that low 6 range, with a let's just say a $400,000 house, right? You are getting a significant amount off when it comes to monthly payment, P&I, things like that. So I think that is a message that needs to get out there. Is if you're looking at buying a home, it has gotten less expensive. If you last October, October 2023, were shopping for a home and it wasn't affordable, I mean, there's a real chance that your payment is $200, $300, $400, $500 less today than it was when you were looking in October.
Yeah, from when I've gone through and I analyzed a couple of my clients that were looking, they kind of got disheartened because of the market.
Yeah.
It's typically about 10% higher. So if you're approved for $400,000 house, you could have the same payment for about $440,000 to keep the payment the same as that, right? So you just got a 10% off sale on houses, pretty much, right?
Buy one, get one.
There you go. Buy 10, get one, maybe.
Yeah. Let's go to my personal favorite segment, and let's go to Reddit stories. So I'll start this one off. This one is from Big_Vomit.
Love that.
Hell of a name.
Yep.
And he says, "Can someone explain the Fed raising mortgage rates to me like I'm an adolescent raccoon?" He said, this was 10 months ago, by the way. So this is when the Fed was, increasing rates. He said, I see the phrase Fed's raising / decreasing rates thrown around constantly, but have no idea what it actually means. It's my understanding that lenders from banks make the rates themselves, though I see now that I'm wrong. What is actually happening here with the federal government involved with mortgage rates? I'm genuinely interested.
Yeah. I really love the input from Lump Cell. Squeak, 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 squeaky, squeak, squeak. That was really insightful.
Love that.
Yeah.
Welcome to Reddit.
One of the comments, yeah. Actually, the first comment was actually really insightful for Reddit on there. So it's important to know that the Feds just control the Fed's rate. That's all they really control. Now, through other things, the Fed's rate can affect other things in the economy, right? But that's all that they do on there. Yeah. So the Fed's rate will also affect short-term borrowing, which affects the 10-year Treasury and a gazillion other things in the economy. So that trickles down to the mortgage market, but it doesn't necessarily at all really directly kind of relate to interest rates on there.
No, yeah. If interest rates are all going to be from the mortgage-backed security market, which is a bond market that's traded just like the stock market, right? Federal Reserve rate controls what the banks are able to lend on their excess money, commercial banks, to each other, right? So what it's doing, right, is a little bit of like a trickle-down effect, right? It's making the money less expensive for banks, which then means they're able to decrease, interest rates on credit cards, on auto loans, on everything like that. So there is a bit of a trickle-down effect, and why it is correlated, right, as far as interest rates for the Federal Reserve cutting and mortgage rates.
Yep.
But it is not directly related. In fact, right, what we talked about, there's a real possibility that today they're going to cut interest rates and mortgage rates are going to go higher. Like if you look at right this second, right, the mortgage-backed security market is up about 12 basis points, which means it's worse when there is almost 100% certainty of a Fed cut today. So that's a good question, Big Vomit, but something that we run into a bunch for sure.
Love it. Let's look at Viper God 69.
Love that.
Yep. Where are mortgage rates going? Here's the answer. So this is an actual post. Is this a post? It said, where are they going? Okay. So the Fed's fund rate is 5.25. The 10-year bond is at about 4.25. Historically speaking, the 10-year bond is higher than the Federal Reserve rate, as you can see in this graph. Given the fairly large gap between the two numbers, either the Fed's rate will come down or the 10-year bond will go up. As the Feds stated, they expect 3 rate cuts, possibly a quarter each. This gap will possibly be resolved by the end of the year with still a quarter gap, meaning the current rates are still factoring this in, and the cuts this year will not impact mortgage rates. So I think it's reasonable to predict that mortgage rates will remain within a quarter of where they are right now for the remainder of the year, with a slight likelihood of increasing to close the gap. This sucks, of course, for everyone in the industry, as people are still locked into their homes with a 3% mortgage rate. Who, in their right mind, sells a house to get a rate that's more than double? Best guess is it will not see any meaningful cuts to mortgage rates until 2025, possibly 2026. How about some bailout money for us little guys, LOs, realtors, appraisers, and the rest of the mortgage industry? We've been getting killed for the last 2 years. Time for us to get a break.
How'd the previous 3 years go?
Yeah, what'd you do with all that other money, bro?
Yeah, exactly.
Tell me that Viper got 69.
But so he did say one thing. I again, this is just kind of you're looking at the charts and kind of doing statistical analysis, and that he is right. Right, historically, there's a gap on between the bond rates and Fed rates. That does mean that rates are probably going to drop in order to find that middle.
Close the gap. Yeah.
I do think one thing that he mentioned that I don't necessarily agree with is he talked about people are still locked in their homes with 3% mortgage rates, who in their right mind would sell to get rid to get a rate that's more than double. People are not buying homes due to interest rates, right? And so there are, if you're a realtor out there, if you're a lender out there, yes, in 2021, you had people that were literally buying a home because they heard they should and because rates were so low. But you take 2021 and 2022 out of it, pretty much always people were buying homes based on events, wedding, whatever. There's the 4 Ds or whatever they say, death,
divorce, diamonds, diplomas, yeah.
And so to think that the 2025 is going to be a bad year because rates aren't at 3% to let people sell homes, I think is a mistake, right? I think even a little bit, right? Like I think if you had a 3% rate and you needed more space, but you saw rates were 8 in 2023, okay, you may say, hey, how much do we need in space? But if they're 5s or 6s,
maybe little Johnny could live in the closet.
Yeah, exactly. Do we need another kid?
Yeah.
I hear adoption's great. So I think that's kind of a misnomer that our industry does a pretty bad job at.
For sure.
Is forgetting why people buy homes historically, because we're never going to get back to COVID rates, right? Or at least I hope not, because
it's crazy.
It was, while in our very small pocket of the world, it was incredible. We're still feeling the effects of it now if you go to the grocery store. And I don't think anyone would trade a pandemic for a 3% rate.
Yep.
Right. So
sure.
I might, but so yeah.
And when was this posted?
Let's see.
Curious now.
Seems pretty.
Oh,
pretty
I love this
soon.
so much. So this was posted 6 months ago. So,
yeah.
So I love this so much, man. So this guy said, and it looks like he's in the industry, maybe a loan officer.
Yeah, sounds like it.
LO. So 6 months ago, when interest rates were 6.8-ish.
Maybe higher. Might have been low 7s.
So high 6s, low 7s.
For sure.
Then he's saying that, so I think it's reasonable to predict that mortgage. First of all, here's your first problem. You're trying to predict mortgage rates.
Yeah,
not possible.
Never great.
So I think it's reasonable to predict that mortgage rates will remain within 0.25% where they are right now. Wrong.
Yep.
So I think the biggest thing here is like we can't predict what's going to happen, and I think you nailed it, dude. Like people are buying a house not for fun. Maybe they were in 2021. Even then, there are other issues, right? I think it's all relative. So people are buying because they have to, not because it's convenient for them for the financially on there.
Yeah. Yeah. And then we talked about this a little bit, right? This is another article. Looks like from the Redfin CEO, Glenn Kyman. I'm going to say Kyman. Maybe Kelman though. Says that homebuyers are very slowly responding to the drop in rates, saying that he has never seen buyers respond so sluggishly to low interest rates. I will say I have noticed that. I think we've had a conversation.
Yeah.
It did surprise us a little bit that, we've seen probably a point drop in the last 3-4 months.
Yeah.
I think that's probably reasonable to say.
Yeah.
And there's still a lot of inventory out there. Homes aren't flying off the shelf. All the buyers didn't rush into it. I think the election has certain to do with that, right?
Yeah.
I think people are kind of uncertain about what's coming. With election, if we look at the data, right? I think normally election, the quarter that the election is in every 4 years is like 9 to 11% less, and then picks up afterwards.
Yeah. So fourth quarter of the year is 10% less,
Yeah.
10% drop in sales. That doesn't mean your value goes down 10%. It means sales slow by 10%.
Yep.
And then election years are 17%.
Yeah. So
pretty substantial.
Yeah. I mean, that's probably what we're feeling. But he attributes the lag to a few different factors, including waiting to see what the Federal Reserve will do at its September meeting. However, he notes mortgage rates have already priced in at least a 0.25 point cut, and that is all. And that is all that we get. We might actually see, or if that is all that we get, we might actually see mortgage rates increase whereas if we get a 50-point basis cut, rates will drop further. Another contributing factor, he says, is lack of listings, with some areas having stale inventory. We've kind of already covered this, right? I do think that if we get a 25 basis point cut, it could be a bit of a rough day in the market.
Yeah.
I don't think that's going to erase all the gains we made or anything like that,
Yeah.
right? But I think a 50-point basis point cut to the Federal Reserve rate will signal to investors that the Fed understands where we are at and that rates need to be lower moving forward. I think a 25% basis point cut may just kind of act like they're going through the motions and just going like, here you go, here's your rate cut.
Yeah.
So.
Yeah, and I personally don't agree with the fact that the stale inventory on there. I mean, houses are sitting on the market. We are at a very high inventory situation on there right now, but I haven't really talked to a buyer that has realistic expectations. They can't find a house that works for them.
Yeah.
I think if someone's looking for a unicorn that doesn't exist, they're not going to find it in any market, right?
Yeah.
They just have more houses to look at and realize it's not the right one. But there's plenty of houses out there for buyers that are realistic right now.
And again, I think realistic is a key word there. I also think it's really important that people understand like actual context of selling a home and taking out COVID, right? Because I was talking to a realtor yesterday, and she was just kind of laughing at the fact that they used to send out mailers, homes sold within 99 days. All right, like that. Wow. They were celebrating that fact. Now, if you have a home that's been on the market 15, 20 days,
what's wrong
buyers
with it?
think it's a 50% off sale.
Yeah.
Right. And so I unfortunately don't know if we're doing a good enough job excluding COVID from people's expectations. And, if you go back to 2018, 2019, what were days on market, they're pretty similar to what they are now. And so it's tough to compare a market to an absolute anomaly and unicorn market. I think we continually do that. And so that's, I think, one of the reasons why, people may be a little bit sluggish to get in is because they remember what rates were. They remember what the market was like, where we're not going back to that.
Yeah, for sure. On the flip side, though, there's also, I have a buyer right now that's buying, right at $400,000, and he's negotiating for the seller. Like, it's not done yet, but they're negotiating for somewhere between $10,000 and $20,000 of seller contributions.
Yeah.
So they're doing a permanent rate buy down, temp buy down, and also getting their closing costs covered. Right. It's awesome, but that never, ever, ever would have happened back a couple years ago.
I think we've talked about this. I actually need to go back and look. I would venture a guess that in the entire year of 2022, and 2021, I bet I saw maybe one seller credit.
Yeah, that's probably pretty accurate.
Yeah, on the initial, right? Sometimes they would have an option period and negotiate some repairs and stuff like that. But again, if you got 12 offers, you weren't getting a lot of repairs done either. You were pretty much taking the house as is.
Yeah.
I had a lot of clients, and I never recommended this, but who waived option period, which is your right to, negotiate repairs or anything like that if something's wrong with the house. Yeah. So, I think people need to be a little bit careful what they wish for, for sure. But I'm curious on your opinion on this. So if you become Chairman Powell, right, what do you think is a reason why they would hesitate to cut 25 or to cut 50 and to go to 25? Make the argument for not cutting 50 basis points.
And I could preface this with they 100% should, but you're saying
correct.
Okay.
I think it's interesting to see the other side of it too, right?
So I think the reason why you wouldn't do it is if it's premature, if the market hasn't, because what they're literally wanting to do is to get the market to be in a negative place. Like they're literally trying to create a soft place for the market to land on for a soft recession on there, which we're already in a recession. We've been in one. But they're trying to get inflation down, which is coming down. It's not necessarily at their magical target number that they came up with, but it's still in a good place.
On that.
The jobless claims aren't quite there, which who knows if the BLS is actually giving us accurate data, right? There's so many factors. So one could argue that with the data that they have, that it's not at the target numbers that they feel like it should be.
Yeah.
So that could be one to say, okay, we're just going to do a quarter now and see how the market reacts.
Yeah.
It's not going to react well.
No.
I'm pretty sure they know that. That has to influence the decision.
Yeah, and I think you hit the nail on the head, right? I think there's probably voting Fed members in that room right, that look at what they have done to inflation in this country, right, and are a little hesitant to pull the trigger on the government then spending more money, which theoretically should increase inflation.
They
Right? And I actually understand that,
Yeah.
right? Like,
Yeah.
especially because they're not at their target number. Their target number is pixie dust, and it's the dumbest thing ever. But they're not at their 2%. So like I understand the thought process of looking around and being like, guys, have you tried to buy milk lately? Like, are we sure we're going to spend more money to buy down rates? But the flip side of that, right, and to your point, why I think it's kind of a requirement is like if you don't, it's going to be bad, right?
Yeah.
Like there's not going to be a soft place to land or a rolling recession. We're going to be in a full-blown recession. People are going to lose jobs.
Yep.
So yeah, things are going to be more expensive, but no one's going to have money to buy anything.
Yeah.
So that's kind of important too.
Yeah. No pressure, pal.
Yeah.
What's like the most alarming thing that you bought lately as far as at the store?
Every time I go to the store, it's just a nightmare.
You got one thing. You have to pick one thing.
Oh man. I'm going to be honest. I don't pay attention to prices a ton. That's more my wife's lane. So that's a tough question for me to answer because I don't really like internalize that a lot.
Are you going to buy like fast food or anything like that?
Oh, that's actually a good point. So I was on a road trip. I went to Florida last week. And as I do on all road trips, and really only on road trips, I stopped at McDonald's.
Got to.
And fries were great, but I got 2 meals, and it was like $28
For 2
McDonald's.
meals.
For McDonald's. So that's a concern, right? Because like, we all know healthier food's more expensive. So if you're trying, to wonder why a lot of the country is obese.
$28.
Yeah. So yeah, that would probably be the most concerning one I've seen as far as like if you lose McDonald's, you've lost the country.
So mine was I'm a big Sam's and Walmart guy. So and they're right next to each other where I live. So I literally just do curbside.
You're a member?
Oh yeah. I do curbside at Walmart, and then I do curbside at Sam's. It's great. Just get it all knocked out, one foul swoop, And I got a dozen, and they were out of the bougie eggs I normally get. So I got a dozen of the Great Value Walmart brand eggs.
Just those poor chickens.
The cheapest poor chickens, yeah. Not treated well, but it's just all they had. It was $6 for a dozen. Jeez. It was wild,
that is crazy.
Bro. Yeah.
I got a hot take. I hate curbside grocery store orders.
Tell me why.
I don't want other people. Well, I should say this specifically. I'm talking like produce and things that like actually take some like nuance on which ones you want.
Yeah.
I will never do because that person picking out the apples does not care if the apple is soft.
Yeah.
So I am anti.
You don't like soggy apples?
Order ahead for produce.
Dude, so like if I order 10 things on curbside, one comes back not awesome. Yeah. I'm cool with those odds.
See.
So I have to go into Walmart and I'm cool with that. One more question before we go to the next segment. What about NAR? What have you seen any kind of, because this is where we've been active with the NAR changes for a couple weeks now.
Yeah.
30 days ish.
Yeah. Beginning August, I think.
Have you seen any kind of impact at all with your buyers at all? Has it popped up?
I honestly haven't seen it a ton come into play. I think, I don't think a whole lot has changed. I was talking to a realtor. I think for whatever reason, I think kind of the trendy thing to do right now is 2.5% instead of 3% to save that 0.5%. So I think that's maybe growing a little bit in popularity, but I haven't seen a ton of, like, I don't think I have had a buyer. I mean, since we're probably 20 to 25 buyers since that's been in effect. I have not had one buyer that has had to pay his real estate agent's commission.
Same here. Yeah, for sure. I think my PSA is if you're selling a house right now, you're selling a house in the market, it's very important to do, I think, 3 things. Number 1, get an agent that knows what they're doing.
Yes,
that's versed in the area that you're selling in and knows that area. Number 2, to price your home well. The inventory is at I don't know the exact high. It's at a 1 or 2 year high. I mean, it's up there for sure.
I think it's higher than that. I think it's 4.
So price your house correctly to be competitive in the market. Number 3, make sure that you understand what you're doing if you're not paying any buyer agent commission as a seller, if you're not doing that. I have a buyer I'm helping right now, and they're paying 0, and they're shocked that their house hasn't sold. And they didn't know better. It wasn't them not knowing, it wasn't them being cheap. They just weren't explained it correctly by the agent.
Yeah.
They chose to work
You don't have to pay, so why would I?
Yeah.
Oh, yeah, you actually have the ability to pay 0. Okay, I choose 0.
Yes.
You know what I mean? It makes sense.
Correct. Yeah.
It's just the education side of things.
100%.
Right?
Yeah.
It was interesting. We were at a Keeping Current Matters David Childers event, and he talked a little about the NAR stuff and kind of what he would recommend. On the selling side, he recommended really not just letting the buyer and the buyer's agent handle that.
Yep.
As far as, hey, if you want to, if your agreement's 3%, send it over as 3%. We'll consider it with all of their offers. And I think that is an interesting. If you're a listing agent or if you're a seller, I think that's interesting, right? Is to not. I wouldn't recommend just digging your heels in and saying I'm only paying 1%, because if you get an offer that's 2% over list and it wants 3%, then you're just at the number that you thought.
It's a super good point. Yeah.
But meanwhile, that client, right, that home probably hasn't gotten shown to a whole lot of people, because the buyer's agent doesn't want to have a difficult conversation with the client as far as like, hey, if you like this house, you have to pay me 3% or 2.5% or whatever we agreed on, right? Whereas, so yeah, I wouldn't dig my heels in on any, and I would be careful of an agent who is like, one way or the other, right?
Yeah.
Like, you shouldn't pay the buyer's agent, or like, no, you have to pay 3%.
Yeah.
I would just kind of, it's up to the buyer and the buyer's agent to put together an offer that is going to get accepted, and whatever that commission is in that offer is what that commission is.
Yep. 100%.
Yeah. And then, just kind of, if we kind of go through some of these, obviously, like we said, big day today as far as Federal Reserve is expecting to cut the Federal Reserve interest rate today at 1 p.m. Central Time. And really just kind of what we were talking about, right? If we scroll through, we've got Business Insider here talking about, interest rates and the Fed expecting to cut. Pretty much everyone, and we see this with the Fed, right? We see the Fed kind of leak information because the biggest thing that investors don't like is surprises.
Yeah.
So nowhere in any of these articles, CBS, USA Today, is there any question about will the Fed cut? It is how much the Fed will cut. So if you're, on the fence of, hey, is the Fed going to cut interest rates? Should I wait? The Fed is going to cut interest rates. It just comes down to how much are they going to cut and how often moving forward are they going to cut?
Yeah. And just from a couple of the articles that I've skimmed through, it seems like a lot of the news outlets, they don't typically do a great job at covering the mortgage industry and the real estate industry. Yeah. It's very delayed, and it's very...
You can just leave it if they don't do a great job.
Yeah, don't do a good job. Yeah. But I will say on a lot of these, it does seem like they are covering the Fed announcement pretty well on here from what I'm seeing. And they're also, I think it's interesting, a lot of the Fed's announcement cuts are focusing on the housing market. And these aren't just articles that are specifically based on, housing and mortgage stuff, but just about the Fed cut, and they do bring up. So I think it's on the Fed's radar. It's pretty apparent to me and news that how important the housing market is to the economy recovering.
Yeah, absolutely. Last update before we sign off here, we are now at 59% likelihood that there is going to be a 50 basis point cut. So 41% likelihood that it is 25%. Ooh. And that makes me a little nervous.
Flip a coin.
A little nervous. I might be locking my pipeline.
Yep. Well, awesome, man. I think that's a wrap.
That's a wrap.
All right, I'm going to see if I can't screw this up. So y'all stay informed, stay cautious, and protect your financial future.
Peace.